What's going on, everybody? My name is Ryan. I'm a CPA, and today I'm going to be talking about the differences between an LLC and an S Corp, and maybe give you a little bit of pros and cons for each thing. But of course, before I do that, I have to beg for your approval. So if you could please subscribe to my channel if you're new here. Thanks for joining me. And if you could please give this video a like, that would be awesome. Oh, and also leave a comment down below if you have any questions or concerns about any of this stuff. All right, so the first thing I'm going to talk about is what is an S Corp. You know, if you have a business, you probably hear people talking about how you should get an S Corp or you should make your LLC an S Corp. So what is an S Corp? An S Corp is a S corporation. It's not an actual entity as recognized by the law, but it is a tax classification. You know, it's a type of corporation. So an S Corp basically is just you can consider it a small business corporation because it has some limitations on who can own it and how it can be operated. So first of all, you can only have 100 shareholders, which, you know, for most small businesses, that's a lot, but you are limited to just 100 shareholders. The shareholders have to be human beings. They can't be other companies, except for certain, you know, sub-S qualified trusts. The shareholders also have to be domestic people. They can be owned by foreign entities. S corporation owners also don't pay self-employment tax, and I'll get into that later as to why that's important to know. And then the last important thing to know is that if you are an owner of an S corporation, you need to take a W-2 salary. You are considered an employee of the corporation. So this could be a benefit or a drawback depending on how you look at it and how you want to operate your business. Okay, so what is an LLC? An LLC is a legal entity recognized by the states. It is actually not an entity that's recognized by the IRS. And what that means is there's no separate tax return that you would file for an LLC. You would file taxes as an LLC if you were a single member LLC, which means you have one owner. You would file taxes as if you were a sole proprietor. You know, that's called a disregarded entity. And then if you were a multi-member LLC, which is two or more members, two or more owners, then you would file taxes as a partnership, which is found in Form 1065. LLCs are great and preferred by many because the way that you can operate LLCs are pretty flexible. You don't have any corporate formalities typically in an LLC, so that's why it's most preferable by most business owners. Any owners of the LLC are not actually employees, so owners should not be taking a W-2 salary at all from the LLC. They should be paid in either distributions or guaranteed payments. Guaranteed payments are basically like a function of a partnership. There's no restrictions on ownership of an LLC. Anybody and their mom and their distant relatives and their distant relative's cousin can own an LLC in the same way that, you know, corporations, other LLCs, other companies can also have ownership in an LLC. So there's pretty much little to no restrictions on who can own an LLC. There's little to no restrictions on how many owners there could be in a particular LLC either. LLCs can also have A-type shares and B-type shares, which means like you can have two different classes of shares. You know, so if you are the one that founded the company and you wanted to bring on investors, but you didn't want the investors to have any voting power, then you can give them some B share of interest in the company, and they can give you some money so they still have ownership, but they don't get voting power, whereas you can still have all the voting power. So that's a major advantage of the LLC, is having two types of shares, whereas S Corps will not have that. They will only have one class of stock. And one last important thing to note is that the owners of an LLC do pay self-employment tax, which I will get into what that is here in a little bit. So what are the benefits of an S Corp? Well, if you're an owner of an S Corp and you pay yourself a salary, that could be a benefit, you know, depending on how you look at it. Paying yourself a salary could be a good thing. The other benefit is that as an owner of an S Corp, you get to pay yourself a salary and you get to pay yourself distributions. Two different ways of paying yourself. And if you pay yourself distributions, those distributions do not get taxed with self-employment tax, which is primarily the reason why when you have a business, people run around and say you should get an S Corp, is so that you pay less taxes essentially by avoiding the self-employment tax there. Now, self-employment tax is roughly 15%, and this is on top of income tax. So as you can see, it can actually add up pretty quickly how much taxes you're paying. It's not, having your business, it's not technically like a rip-off or something, like you're not getting ripped off on taxes. Self-employment tax is the same tax as Social Security and Medicare tax. If you were to have like a regular job, where you have a W-2 salary, you still pay, half of your Social Security and Medicare tax. Your employer that you work for pays for the other half. Well, when you are, when you have your own business, when you're self-employed, you pay for both halves, which equates to 15%. Now, of course, you get to deduct half of that on your personal taxes, but it still ends up being quite a bit of taxes in the end. Income tax plus about 15% of self-employment tax, plus your state taxes if you have it, that will add up quickly. And that's why the switch to an S Corp is so popular for many small business owners, because they can really save a substantial amount of money year over year if they were to avoid some of that self-employment tax through their distributions. Now, the IRS does want you to collect self-employment tax or employment tax, whatever you want to call it, and you will do that through your W-2 salary as an S Corp. And that's the other thing about the S Corp, is that while you can pay yourself a W-2 salary, you actually have to pay yourself a W-2 salary as an owner. So that is why the IRS, they impose that rule so that they can collect some employment tax from owners of S Corps. The other benefit of an S Corp, and this is solely for single member LLCs, the other benefit over sole member LLCs, is that some attorneys believe that it will give you a little bit more liability protection than if you just filed your taxes as a sole proprietor, if you're a sole owner LLC. So if you make the election to switch to an S Corp, then you can file your tax return on a separate tax return, the S Corp tax return, and some lawyers perceive that as giving you a little bit more liability protection. All right, so what are the downsides, the drawbacks of an S Corp? Well, the first one is, some might say is a drawback, is that, because the IRS wants to collect employment taxes from you, one drawback could be is that you are required to take a W-2 salary. And not only that, you're required to take a reasonable salary. And the IRS provides little guidelines on what is considered reasonable. Basically, you have to dig around what somebody in your field would make in your area with your level of experience, and you would have to try to take that salary. Now, if that salary is going to put your company at a loss, at an operating loss, then obviously you probably shouldn't do that, because you're going to run into cash flow issues and stuff. So, there's a lot of nuances here. If you're profiting only $20,000 a year before salaries, should you really be paying yourself a $60,000 salary after that? My opinion would probably be you probably shouldn't do that, because then you're putting your company in a really hard cash flow position. If you're a single member LLC, your tax return situation is a lot less complicated than if you were to elect as an S Corp. Now, between an S Corp and multi-member LLCs, there's not much of a difference there. Since multi-member LLCs are taxed as partnerships, then they have to file a partnership tax return and go through pretty similar stuff that an S Corp has to go through. But if you're a single member LLC, you file taxes on your personal tax return as a sole proprietor. So your tax situation is much more simple. If you are a single member LLC and you elect S Corp, here are some things that you have to consider that are more complicated. One is that you need to file a separate tax return that's due 1 month before your personal taxes are due. Two, you need more complete financial statements than you would if you were to file as a sole proprietor. You need an income statement, a balance sheet. You'll also need some details of shareholders' equities in order to complete, basis, distributions, contributions, all on the S Corp tax return. You need to pay yourself a salary, and with paying yourself a salary, you need to have a wage withholding license with your state, maybe with your city or county, depending on which area you live in. You need to have unemployment insurance, You need to track, federal unemployment insurance. You might need workers' comp insurance depending on where you're at, and you have to pay withholding taxes every quarter, and you have to file quarterly, payroll tax forms with the IRS and probably with your state. So all these things, just by having a salary, can make things really complicated. Usually I recommend people just get a payroll company to do that for them because, you don't want to mess with payroll taxes. The IRS takes that stuff very seriously. S Corps are also not very desirable to investors. If you're a company who is looking to get investors through equity, they really don't like S Corps. And it's because businesses can't own shares in the S Corp, and most investors probably would want to invest through their business. So most investors will have you probably switch to a C Corp or go back to an LLC, one or the other. But if you're going to switch to an S Corp and you're looking for investors, might not be the best move there. And the last thing that's probably I would consider a downside is that your distributions have to be taken on a pro rata basis. That means if you have 2 or more shareholders, if you both own 50-50 of the S Corp, then you have to take 50-50 distributions. Whereas if you're an LLC and you own 50-50, then maybe you as the founder can take a much larger distribution since you're the founder, and maybe your other partner who just threw in some money to invest in your LLC can take less of a distribution because they are just an investor. So with an LLC, you have that flexibility to distribute money in however way that you want, as long as you agree with the other members. Whereas with an S Corp, you have to take pro rata based on your percentage of ownership, which actually the actual last downside of the S Corp is that you don't have multiple classes of shares like you do with an LLC. So that's all I got for today. Thanks for watching. I hope you found this video helpful. If you did, please smash the like button. I'd really appreciate that. And again, if you're new here, please just consider subscribing to my channel. I'd really appreciate that. And I'll see you all next time. For now, take care, stay safe, and see you later. I hit the function, hit the rose till I hiccup. I hit the stage and leave with money that's a sticker. She picture perfect, so I told him I'm a flicker. Bill, I'm in the mood for a change up. I leave the city and return with my change up.